Good morning. This is February 6, 2023, and it's about 8:20 a.m. Pacific Standard Time. So you can see the markets are where they're at. So last week, what I mentioned, I had purchased some put options around here, and then I bought some more up in here. And the market's down about here. So I'm pretty much at a break even. Actually, I'm at a plus. Kind of break even on these and at a plus on these put options here. So as you can see, the S&P is pretty much where it's at. It's down about 16 points, and then you got the Dow Jones. It's about minus 58, and 51 points, minus 51 on the NASDAQ. So pretty much not a lot happening right now. So here's a daily chart. So the market pretty much, I believe, is pretty much hit its top here, at least for now, and it's going to start coming down. And so that's my strategy. So this isn't really hard to figure out. You know, we're in a downtrend still, trend line. So the market is, we're still in a bear market. Until this line crosses this line here and goes above, then we're considered in a bull market. But in the meantime, we're still in the bear market, so the tendency is to go down. And you'll see that these markets retrace. Like this market came down here and it retraced up here, and then eventually came down here, and then it traced back up here, came down, and it retraced. So the question is, what's really important are retracements and how far they come down. It pretty much tells you where this market is going, at least in the short term, and even in the long term, if we do a long-term chart like this. So I'm going to do a video on retracements along with support lines. But pretty much, if we were to take this line here and come up to here, or even from here to here, the market retraced down to here. And I mentioned I use Fibonacci's, which, let's say, Fibonacci right here. And markets usually retrace anywhere from 38 to 61%, so usually around the 50. So this market came up from here to here, and it retraced down to about 61%, which is a healthy move. And then it continued up. Now, if it would have retraced and came up a little bit and then gone down, then it's continuing this bear market, which it didn't. It came up here. So now I would consider this retracement equal to that. And I think this line right here is going to come down anywhere, at least into here, here, or here. So the question is, when do you get out? And if you're going to be real conservative, you can get out maybe somewhere around here. And you want to be a little bit more aggressive, you could get out in here. But, you know, that's a tough one because we have to kind of feel this market as it's traveling during the day, and maybe even during the week, but during the day for now. And so right now, there's not a lot I can do. I have my alert here, and that's just to tell me if this breaks this line here, I'm going to buy some more put options going down, of course. So that's what my alert's for. I don't spend a lot of time, you know, maybe about half an hour, not even that, but a couple YouTubers out there, I was talking to one, and I mentioned she spends 5 hours a day trading. And for me, that's a long time. I don't want to be stuck to this computer. So I spend maybe half an hour. There's not a lot to really do here. If I leave, which I will pretty soon, I'm going to set another alert somewhere around here. Let's say around here, because this is the top of this bar. And I'm going to leave. I'm going to take off somewhere. And if this market decides to come up here, at least I can look at it on my phone and decide what I want to do. Of course, it breaks above this, and I'll have to get out of my positions. More likely, because things can shift where it can just go up and it come back down. But at this point, I think this might be a down week. That's what it feels like to me. Market did come down, hit this down here, and then bounce back up. So this is all normal for it to retrace. Because like I said before, this is a buy-sell game. So you can't make money unless you sell. And you have to buy low, and then you sell high. And then when a market starts going down, then you start, when it hits close to bottom, you buy again and it comes up. So it just pattern repeats itself forever. It's infinite. It doesn't stop. Last week I showed you a chart on the crash in 29 and July. Market hit bottom July of 1932. But what did it do? It just came back up. And it came down and came back up. So the market keeps moving. It does not stop going a straight line. So you can always make money, even though a lot of people lost all their money. You know, banks went under. It was just a big mess. But still the markets kept moving. And there were people that were making money. These are people that are aware of how the system works. So, okay. So, that's, like I said, there's not a lot to do here. I've already done my homework, which doesn't take much because I have a lot of experience with this. And right now I am thinking the market's going to go down from this point on. And actually, from where we're at here, this might continue down pretty far. Yeah, I don't really see this going above here. Yep, that's how I feel right now. But again, I put my alert here, and if this market breaks down into this area, I'm going to buy some more put options, and then, you know, I can keep buying put options. There's different strategies where you can load up in here and just sit on it and just wait, and you decide when to get out. So that's the tricky part, is buying is, that's just one part of it. Selling is the other part. Because if you buy and you're up maybe $100,000, if you don't sell, eventually, you know, it might go back down to 50,000, 25,000, and maybe even zero, you know, back to zero again. So that's why you have to sell. And then you take your profits and then you get in again. And that's how this market works. You don't want to go long term. Long term, actually right now, long term is very dangerous because we're in a bear market. And there are people that are what you call dollar cost averaging. Why would you dollar cost averaging in a bear market? It makes no sense. If you're in a bull market, okay, so you're in a bull market here. Here's a bull market all the way up. But let's say this, during the pandemic, the market crashed in March and started up again. Yeah, anytime you have these kind of crashes like this or like this, market's going to take off. Always. Always happens. Here's another little one here, and the market took off. And even if you're in a bear market and a market comes down like that, it's still going to go up, but the highs are going to be lower. That's a bear market. In this one here, the highs are higher and the lows are higher, and that's a bull market. Pretty simple. So as it continues up, if you start dollar cost averaging here, that makes total sense because, you know, it gets up to a certain point which is this from here to here took this all the way up to here. So if you dollar cost average all the way up to here, you made a lot of money. But if you didn't get out and the market came down here, now it's here, you lost a pretty good chunk of this. And if we do go down here, and I believe we are going to come down at least back to this point, and you don't get out and your dollar cost averaging on the way down, you're going to lose a lot of money. And you're going to be pretty sad, because that's not the way these markets work. Dollar cost averaging does work, but only on the way up. And that's if you're a long-term trader. Now, I'm not a long-term trader. I'm a short-term because I don't actually trust these markets, especially now. So you can say I'm actually dollar cost averaging going down. So if this market hits and comes down in this line and does a second bar down like on a 4-hour chart, yeah, I'm going to buy some more puts. So I'm going to be dollar cost averaging down to a certain point, and then I'm going to get out and I'm going to wait for the next run. But to stay in long term, sure, if these markets are going to correct and continue down for the next year, even though they're going to bounce around, then yeah, you can do that. You can dollar cost average, but I would, and if you're going to trade options, I would buy options way out. I mean, maybe even 6 months. Now, I don't play that game, so I don't know anything about that. If that's what you want to do, then you might have to look for a channel where somebody does that, longer term options. But I don't trade that way. I trade short term. I might get out somewhere in here. Depends on how this market goes. But either way, I'm in for short term. My contracts are March, so they're going to expire in March. So I'm pretty far away from that. I could buy February contracts, even though they're not going to expire for another couple weeks. Because they're cheaper and they do gain value faster than the March, for the most part, not always. And but I go by feeling, and I just feel like I feel very comfortable with the March contracts. You want to go with comfort. You want to be very comfortable when you're trading these markets. You never want to be in a place where you get stomach pains or headaches or your throat bothering. Those are clear signs there's something wrong. So you want to be very comfortable with your trades, and you feel good about them. And you also know that if your trade goes the other way, opposite of the way that you want it to go, and you have quite a few positions, you want to make sure that you get out, because there's always opportunity to get back in again. So you want to cut your losses short, and you want to make your gains. You want to keep your gains going, pretty good. I mean, you can make some pretty good money. Some of these YouTubers that are day trading, they're making, $100,000 a month. You can do the same here. You can do that, but you only spend a few minutes a day on this, and you just load up right when the market you feel like is headed on its way down. And you don't want to be greedy. If you make $100,000 in a month, that's good. If you make $1,000 in a month, and that's where you start off, then that's good too. That's $12,000 a year. You make $2,000 on a trade. That's $24,000. You can keep doubling, whatever you feel comfortable with. You don't want to be greedy. So that's it for now. Like I said, there's nothing to do. That's what I love about this game. I can just take off and go do whatever I want. I can even travel, as long as I have the internet, and I can just keep watching this. And that's how simple this is. Could be a very simple life for you, or if you want it exciting and you want to sit in front of your computer for 5-6 hours a day and day trade, then go for it. I did that, and believe me, I just that's not anything I want to do now. I want to enjoy life and go out there and do stuff. So okay, so that's it for now. We'll see how tomorrow goes and the next day. And I'll check with you tomorrow. Okay. So one more thing, I had a comment. Somebody asked me about setting my alerts. So let's say I'm going to take off right now, and I'm going to set an alert. So my alerts would be set where? Let's see, let's go back to the daily chart. So let's say I set my alert right here. Okay, so it's set at or above that line. I'm going to create that. So there we go. So if I go into a 4-hour chart, that's set up in here, in this area. And that's good for me because I feel like this market really shouldn't go above that line today if we're going to continue down. I mean, it could, we can start just balancing in this area. But at least it's going to alert me and it'll let me know what's going to happen wherever I'm at. And so yeah, so that's good enough. I feel very comfortable with this. And now I can walk away from this computer. Now, the other thing is I set an alert down here because like I said before, if this starts coming down here, I'm going to start buying some more put options. So I've already figured out which put options I want to buy. And so that's already set. And so I'll have to make a video on how I buy my options and how I add positions on there. And then that's it. It's that simple. And the options that I look for, usually don't look for them until that day because they fluctuate in price. And it's very simple. I just go and I check the options, look at the price where it's at now, and then I kind of estimate where it's going to be if it comes down in this area, and then I just put them in my order, or actually put them in my my list here. See, these are the options right here that I have, and then I just I add them to here, to this list, and when I'm ready I just click on it and then I buy it. It's that simple. Anyway, like I said, I'm going to make a video on how I buy options and how I sell options, and it's very simple. All of this is very simple. There's nothing complicated about it. And so, okay, so that's it. I hope I answered that question to that person that asked me about alerts. And I'll go more into detail about that in another video, just on alerts, probably just alerts by themselves. Okay, so that's it. Talk to you guys later.